Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts this week for Setup Sunday. We've got, of course, the election this week in the United States, these United States of America. We've also got the FOMC meeting a few days after the election. There's a scenario where we may not know the presidential results of the FOMC meeting. That would probably be most upsetting for the market, is an extended period of unknowns, an extended period of uncertainty. So the faster we get this resolved, the better. Some of you will disagree with this, but a lot of what we've been pricing in is a Trump win. So if a Trump win is not the reality of the outcome, markets may get angry on that and reprice a bunch of stuff. So be prepared for that. But as far as the list on the macro and crypto side, we've talked about this for a couple months now, here and there. Not too much has changed. We still have positive liquidity. We still have an easing cycle. Again, you can disagree on whether or not we need the rate cuts or not, whether or not job losses, job openings are conducive towards a cutting cycle or not. But that's what we're getting. It looks like what we're getting. And we'll see what Powell says on the 7th in regards to future cuts, the path of easing. But so far, markets have priced in a 25 basis point cut this week. One of the perplexing things to me that's happened is the dollar strength. We've seen a large rebound in the DXY, and we'll look at all these points individually with charts in a second. But we've seen a large rebound from the 100 level to 104. Again, is that pricing in a Trump win, trade, tariffs? I have no idea. Will that reverse? Will that matter to BTC? It hasn't mattered to BTC on the way up from 100 to 104. It may not matter if the dollar gets smashed down back to 100. The big thing for the election is, at least in the crypto realm, is certainly regulatory and tax risk. From a regulatory perspective, if status quo is what we're getting for another 4 years for crypto, that's going to be a problem for alts. It's going to be a problem for regulated products in the United States. And if we continue on this path of regulation by enforcement, Wells notice, activity, that sort of thing, that's not going to be conducive to an expanding crypto environment in the United States. Now, the Bitcoiners, like myself, certainly care less, but there's still stuff in the background where we could get hit with some sort of unfair tax treatment, or we could start drumming up calls for banning BTC, stuff like that. My hope is that if Harris does win, the lobbying money from these crypto people will be enough to help persuade the regulatory gods from smiting us eternally, if you know what I mean. On the geopolitical front, that continues to be ongoing. We'll take a quick look at a tweet on that, but it doesn't appear as though anything has changed there. Now, you could say Harris versus Trump, is one going to continue these proxy wars versus the other? Markets will price that in probably rather quickly, and I would argue in the moment we're at somewhat of a Goldilocks economy. Now, on the crypto side, technicals still are favorably bullish. Momentum has been bullish, but that's been smacked down over the past couple days. Inflows have been very high. Most of that has been ARB. We'll take a look at that. We have Q4 seasonality on our side. We've got FTX dollars still coming in the ecosystem. We've got Saylor in his 42 billion in the next 2 years, potentially coming in. We'll take a look at MSTR. And the outflows generally have been low, but GOX still has 3 billion. And we'll take a look at that. US government, by the way, still has quite a bit of coin. And if the Dems are elected, then you'd expect that to be sold rather quickly, I'd imagine. I expect some retribution type activity from the Dems based on the crypto spending on the right. That's just me. Looking at the flows weekly for BTC and ETH, ETH has been non-existent and unimportant thus far. On the BTC side of things, flows have been extremely high weekly. Week over week, a lot of this has not been net long bets, but it's been ARB traders coming in here and smashing down the annualized basis. How this works is you short the future and you long spot, and you are effectively net neutral, collecting 12%, 10%, whatever it is, which is significantly higher than the risk-free rate right now. And this only gets more attractive as the risk-free rate goes lower. This does compete with the 10-year yield, which is rising. So there's some sort of equilibrium at some point where the basis becomes less attractive, despite the basis going higher. It just depends on duration here. This is a lot of in the weeds mumbo jumbo, but this is where the money's going. It's smashing down the ARB here. We also had the second highest day on CME BTC options. If we go all here. So there's a lot of hedging, betting on election outcomes, post-election outcomes in the options market. This was the big news last week from Saylor, 42 billion. I have a chart at the end. It's going to trade as technically as it has thus far, which is very, very technically, so great. I don't think it's a risk-free infinite money loop machine. I do think the premium to NAV matters, and I hope Saylor comes in and smashes it down as he taps the ATM and buys more BTC. That's about as far as I'd go with it. But I wouldn't just assume it's up only forever. The good times can never end. That's what I'm hearing from a lot of the MSTR folk. It's leveraged BTC, has a place in every portfolio, sure, but I'd be careful with it, assuming it is one way only. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. Looking at the old BTC, it did seem odd to me that we were trying to break all-time highs pre-election. It seems a bit odder that we're giving all that back. Now, this, of course, correlates perfectly with Trump versus Harris in the betting markets. It correlates perfectly with momentum in the betting markets. And I, of course, have people chirping at me that Bitcoin doesn't care. I have people chirping at me that this is not Orange Man. This is something else. Okay, whatever. I'm just looking at correlations. Correlation isn't causation, but it's clearly speaking to the market, especially on the BTC side. For this week, for me, the best trade that I can think of is a bid at 63K. 63K is also the 20-week moving average, along with the daily Kijun on the cloud. Frequently throughout a trend, we will come back and tap the Kijun. That's this red line here. We actually just did it not too long ago, October 10th. Occasionally in an active trend, you actually get locked out. You have zero chances. And this recent trend in Q4 2023 into Q1 2024, other than the TK crisscross here, you really did not have a chance to get in. So for me, that's the level I like the most based on the cloud. Moving averages remain bullish. Cloud remains bullish. What happens this week will likely be a blip on a forward journey post-election finality, as we have seen historically. Now, we don't have 1,000 years of data on that, but what we have seen anger, fear, aggression the day of, and then continuation of the trend. Where this could fail would be a close below 60, a close below 58. Now, I'm expecting a Harris win to get very, very angry in the markets, very volatile, because that is not priced in right now. That's why I like bids. I like stink bids, as they say, even below 63. But 63, certainly a possibility on a wick. It wouldn't destroy anything here for me structurally, but a lot of people are going to come in here saying, it's a upper thrust after distribution or something, UTAD. There's going to be some Wycovian schematics that are going to come out of the woodwork, all that sort of fun stuff. Something else to watch for up here would be any head and shoulders. You've got the possibility for this. So that's the next thing to watch for throughout the rest of November. But from a technical perspective, if we can survive this week above 63, that's a win. So I'd lay it off on the leverage on 100x on the extra spicy stuff this week. That includes MSTR options, which have fun with that because those are going to go all over the place, is my guess. This is a CME Fed probabilities, 98% chance of a 25 basis point cut this week. This is essentially never wrong leading into the meeting. The worst you ever see is usually like a 50-50, like it was last meeting, where the market just really isn't sure what to price in. But here they're fairly sure we're pricing in a 25 basis point cut. What's more important is what happens in December and January, also pricing in a series of cuts. On top of this, the QE versus QT journey, also very important because that speaks to liquidity, certainly important for altcoins. Something that has fueled both legacy and crypto has been the reverse repo market. This is an inert pool of capital that had been filling up, money coming out of the ecosystem. And from May 2023 to present, it has been draining. It drained very quickly throughout 2023 into 2024. And we certainly benefited greatly from that on the crypto side, on the legacy side. But here the concern is, should the reverse repo drain to zero and should bank reserves dwindle, then it is likely that we see a resumption of QE versus QT. Basically, if liquidity just gets too tight, the Fed's going to have to intervene. James Lavish did a good Substack on this week. That's what this image is from, if you want to get in the weeds on that. But that's something to watch for this week as well. What does Powell say about that? Again, if we look historically, the reverse repo in the green here, on an inverted scale, reverse repo was draining, BTC rising, S&P rising, NASDAQ rising, regardless of rates, right? Rates continue to rise, and it's not like BTC continued to fall. The S&P didn't continue to fall. So something clearly was helping out and juice the markets, and that was certainly the reverse repo. So to see that drain to zero, now we get to see real fireworks, right? Do we get banks blowing up first, as in being insolvent? Or does the Fed start to step in and end QT and resume QE? Something else to watch for, this purple line is the BTFP program, and I think that ends March 2025, and it may end at the end of this year. So that's another just liquidity tightener on top of everything else. But you always have people asking, okay, what's the next catalyst here? What's the next catalyst here? I like seasonality. I like Saylor coming in, buying BTC. I like uncertainty from the election ending and potentially the Fed resuming QE. Now, that would certainly help the liquidity picture. I don't know if it would be the best thing to do, but it would help the liquidity picture. US liquidity in the white has ranged quite a bit, really gone nowhere over a few years now. It's declined since the beginning of the year. We've got a debt ceiling fight coming up, probably. That should be fun. And we are just small fish in a big pond when it comes to the liquidity games. But what we want to see is liquidity rising. Now, I mentioned DXY, which is in bullish territory here. And if we see DXY above these highs, I'd imagine risk markets very angry. DXY usually pretty correlated to yields, correlated to oil prices falling, yields rising. So everything's in a bit of a jumbled mess right now on the correlations front. But moves to 105 or 106 here would be problematic. Moves on the 10-year yield to 5% probably means the Fed starts to step in. That's another liquidity injection, yield curve control mechanism to watch for, because things likely start to break when we go back to 5% yields. This is the bond complex, and it has gotten increasingly angry. You can see here just inversely correlated to the DXY. All of these, the long end, the short end, everything just selling off as yields go higher. Now, this could be a statement on the future of inflation expectations, or it could just be money waiting to see what happens for the election. But hopefully we find out this week. Now, as far as Harris directly affecting most of us on the crypto side, increasing long-term cap gains to 28% would certainly be an issue for, let's just say, most people in crypto, especially if BTC continues to rise. Top earners with a 33% cap gains rate. So I can't imagine the markets are going to be too happy with that. Part of the reason why Buffett is selling, and this has been making the rounds this week, or since Saturday when the earnings released, part of the reason he's selling most likely is because of the potential tax implications here. We have a lot of people sharing this chart, Buffett's cash pile, right? What is he doing? Is he prepping for the end times? He's got to be scared out of his mind here. But when you look at it and normalize it for percentage of total assets, it is at a high. It is, I think, at an all-time high of 28% in the yellow here. But it's less likely feeding into the doomer narrative and more likely that things are normalizing, and there's a tax concern component with this as well. Here's, I think, a cleaner graph. Cash pile relative to total asset. It is an all-time high, sure. And the last time it was this high was pre-08. But he's not perfect. Nobody's perfect. I'm not saying we can't crash tomorrow, but we have people saying the opposite, that we're going to crash tomorrow. What does he know? Buffett's never wrong. That's certainly not the case. As far as the election goes, betting markets are certainly based on momentum. A lot of that momentum on the Orange Man side got deflated yesterday after an Iowa poll came out. BTC got very angry on that. Alts even angrier on that. And on the poly market data, it's about 57.43. And again, you can see the momentum here. It's not necessarily the absolute value, but the momentum for Trump has been rising. BTC price has been rising Momentum for Trump falls, BTC price falls. So that's currently where we're at in the market. Now you can disagree with that and you can ignore that. And you can say it doesn't matter. You can say the correlation is silly, but that's what we've seen. And this is the specific poll out of Iowa where the poll has Harris at +3, despite having Trump at +18, I think, in June or July. Margin of error here, 3.5%. Now, he's unlikely to lose Iowa, to be clear, but the market got very, very angry on that information on the BTC side. If you're curious on more information on the polling side, Vox just put out a great video on what polls can actually tell us, and they explain how they're done, the questions asked, that sort of thing. Very interesting. I'll put this in the description of the video. As far as the geopolitical side of things, this was as of, what, Friday? The 31st? Thursday, Friday? Iran preparing for a retaliatory strike from Iraq to Israel. Haven't heard much about that since that day, but this is this ever-looming back and forth, never-ending, seemingly, geopolitical strife that hopefully can move to a path of resolution once a new president is elected. But we'll see. Now, as far as remaining coins, we've got GOX at nearly 45K BTC. The reason this came back in the forefront last week is because GOX moved a bunch of coins. And so the question was, okay, are they preparing to move more? Are they preparing for another slug of redemptions here? I think the US government also has a fair bit of coin left, 208,000 BTC, that let's just hope doesn't come out all at once, right? I mean, this is the reality. We have years of seized funds, pent up unlocks that could start to unwind. And ideally this happens after we hit all-time highs and not before. That way we have some price momentum on our side to absorb this. But yeah, that exists, right? And if we see that, again, is the market going to be happy with that? Probably not. You can ignore it. You can say it won't matter. But the reality is the market's going to get angry if they see the US government or GOX coins coming out, selling, that sort of thing. Back to technicals. Something else I'm watching this week. Do we hold the midpoint of this pitchfork? Do we hold the blue zone of this pitchfork? I still like the path. I still like the trajectory, but we'll see, right? I mean, things could get angry. Things could get very angry. Sub 57 would be no bueno, as the kids say. But if we can hold the midpoint here, I think that's fine. And, you know, the worst case is probably Harris wins, GOX moves coins, and the US government starts selling coins all before the end of the year into December. And then we're talking probably sub 50, just because I don't know how much of the market could realistically absorb that other than Captain Sailor coming in and swooping to save the day. But that's something to watch for, right? What are the catalysts for these negative events that are stacking up on us from a supply side towards the end of the year? I mentioned it already, but the FTX money is also coming at the end of the year, and that's something. It's I think what, 2 to 3 billion for the low end of people who are getting refunds. So we'll put that in the positive liquidity column. This is the weekly Bollinger Bands. We did not get a weekly Bollinger Band breakout last week. And there's going to be tons of commentary on how this is an ugly wick. This is an ugly weekly. This is a reversal candle. It's hard to disagree, right? It is what it is. It's a candle. It is got a massive wick. Doesn't look bullish. At the same time, we're also dealing with exogenous stuff like the election. So if we get a weekly close below the current weekly last week, then that confirms bearishness, certainly, and probably a path to 63, most definitely within the next 2 weeks. But I don't think anyone's doing much of anything, realistically, until this week's over, right? Like, they're going to want all the information in front of them to decide what they want to do from now until the rest of the year. On the MSTR side, like I said, it's fairly technical, despite anything premium nav, earnings call, whatever. We're still holding above any of the Williams support fractals. Currently, that's around 200 would be the stop loss level. The daily Kijun is probably 190. The previous support, 175. So I like all those levels down to 150, right? Yeah, I think you just have to open your heart for volatility this week, and on a 2x BTC product. Why not, right? Why can't we see 150 on this week? I don't know. Sure, right? BTC goes to 63. MSTR goes to 150. Why not, right? So again, me personally, I wouldn't do anything crazy this week other than just bracing for impact potentially. Total 2 BTC continues to be an absolute dumpster fire. This is basically alt strength, which is not there at all. Continues to be bearish on the cloud. And now we're getting into territory last seen 2019 through 2021. Last time we were down here, it took 2 years to bottom. So sit tight, right? You know, look, if you've been in alts this whole time, I don't know what to tell you, but it doesn't look like it's going to get much better anytime super soon. Even though BTC was pricing in a Trump win, alts certainly were not. Alts have not had a good time for quite some time, right? We're not seeing money coat and go to alts versus BTC. So is that a regulatory problem? Is that a liquidity problem? Either way, we're not seeing any love on a relative basis for alts. For Sol this week, 125, sure, right? Anything at the bottom of the range, anything that's in a range can go to the bottom of the range. You know, if BTC gets angry, if we get some volatility based on uncertainty, then I think you could see wicks all over the place. And part of the reason for that is because the books are going to be thin, the order books, because people are waiting, right? They're waiting for finality, they're waiting for an outcome. And so one way to take advantage of that from a trading perspective is just have that knowledge and just set bids where you think price may go, right? You may not hit that level, but that's one way to do it. And then on ETH here, lastly, we're still in this very tight consolidation. I realistically do not think ETH can go to 1500. I really don't. But if this breaks down, that's where this measures, 1500. That's also a support pivot. That would be a full retrace of the breakout from 2023. So it's not impossible. I just don't think it's highly probable. But if the markets get angry, sure. Now, if we survive, Bitcoin survives, everything survives, then eventually this should break up to 3,000 plus. But is Sol going to look better? Probably. Sol already looks better. It's held the range for months and months and months here. And certainly BTC is going to look better. So ETH BTC is going to look more like total 2 BTC, where from a trend perspective, you really haven't had evidence for any positive momentum in years. I mean, let's be honest here, right? So this week should be volatile. It should be fun. Don't do anything crazy. Don't do anything I wouldn't do, you know? And I'm just going to keep in mind that post-presidential election, historically, Bitcoin does very, very well. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.